Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will explain how to spot breakout opportunities daily. Now, this will be a very important tutorial because I will go through some quite important things that you need to know when it comes to the Forex market and the mechanics of it. And I will explain how you can leverage sessions to spot breakout opportunities every day. Now, I will also go from a theoretical perspective first. We will be speaking about the theory of this, and then we will go very much into practice. So it will not be just words. I will also show you a trading strategy that I use myself and a complete backtest for that strategy on real market data. So this will be a very important tutorial, which I suggest to watch till the end. So until the complete backtest of this real trading strategy, which I'm actually using on real data. So without further ado, let's get right into it. Okay, so the first thing that you really need to study are market sessions. Now, as you know, the Forex market is divided into, let's say, 4 major sessions, which you can find also here on any website which tracks the different sessions of the Forex market. And you can also find indicators on TradingView about the different sessions. Now, what you can notice here is that there are 4 major sessions: the Sydney session, the Tokyo session, the London session, and the New York session. This one is commonly referred to as the Asian session. Okay, so it is essentially during the night European time. And during that session, as we can see here, and in general throughout the course of the day, so throughout these 4 sessions, you will see a difference in the liquidity and volume that there is in the market, which you can see here tracked by this line. You can see that during the night, basically, let's say, for example, Berlin time during the night, there is clearly low liquidity, low volume in the market. We can see here the volume is quite low. Then when the London session opens, so already when the London session is about to open, so the few hours before, already the volume starts to increase. We can see here how it's slowly picking up. Then it continues to increase and reaches the peak here, which is essentially the overlap of the London session and the New York session. During this overlap, there is a huge increase in the volume of the market, so also in the volatility of the market, and obviously trends which have been established at the beginning of the London session usually find their most strong moves at the beginning, but then during the session. This is where usually you have the highest volatility. And then after that, the volume again gets decreased, and it then essentially you are once again into the Asian session, and the cycle keeps repeating over and over and over again. Now, this is all good and is all important to know, but how to use this in actual practice? Why is this so important? Well, to answer this question is quite easy. What we have to do is go on a chart and mark out the Asian session. Now, what we can see here is that very often, not every time, but very often, the Asian session, which I have marked out here with these blue boxes, is arranging for an Asian session. Other times, the Asian session shows a trend. Now, there is a clear difference when the Asian session is ranging, which is most of the times, and when the Asian session is actually trending. Now, what is the underlying reason for which in a Forex session a pair is ranging or trending? Well, what is behind that is if either the bulls or bears on that pair are in control. So if there is an uptrend, like for example here, it clearly shows that during the Asian session, the bulls were still in control. And if that is the case, the market has already covered a big amount of a price difference. So in that case, there usually isn't much of a breakout opportunity to take advantage of because the market has already moved. Bulls or bears are already in control. So there is nothing really interesting. Even if there is an Asian session with a downtrend in it, things tend to tend to be not interesting then throughout the day. So if during these low volume hours still the market is trending, usually there is nothing really interesting and there is no real breakout opportunity that is interesting for the pair. However, if during these low volume hours neither bulls or bears are in control and we actually have a ranging market, like for example we have here, like we have here, like we have here, this is where things get very interesting because the price here is actually compressed and awaiting a breakout and awaiting a direction when then the volume is getting increased. So if the price is with no direction and compressed throughout the low volume hours of the day, then when the volume increases at that point, we have a breakout opportunity. And usually the breakout can be quite rough and quite big. So there is a lot of volatility to take advantage of and to trade that breakout. And we see that, for example, happening here. The Asian session was ranging, then we have the breakout to the upside and the price explodes. Here we have a ranging Asian session, the market breaks out to the downside and explodes to the downside. Here we have here we have a trending Asian session. The price is not really compressed in between two levels. And in fact, throughout the day, then there isn't really much of an interesting day. Then the market here again shows a ranging Asian session, and the breakout to the upside can be quite explosive. So that is why there is a key difference between a ranging Asian session with compressed price and a normal, not really normal, but a trending Asian session. Most of the times, the Asian session, since it has low volume, will actually be a ranging session. So it will be perfect most of the days for a potential breakout opportunity. So have I actually incorporated this key concept of how the Forex market works into an actual trading strategy? Because most of the videos that you see online from people, it's all talking, okay? There is no real backed by data show of how a real trading strategy is actually built upon the concepts that they explain. In fact, most of the times the concepts that they explain cannot really be traded, or it cannot be really coded in a rule-based way. Because if a strategy is clear enough, it can be coded. It can always be coded if it is clear enough from a rule basis perspective. So if the logic of a strategy is clear enough, then you can absolutely build an automated trading strategy upon that concept. And then you can run that algorithm on historical data and essentially evaluate potential past performance of the strategy on the data. So let's go and check out my own implementation of this concept, which is a building block of the Forex market, and let's run it on some real market data and see how it is in fact possible to build some trading strategies, real trading strategies on this essentially pillar of how the Forex market works. Okay, so here I am on my MetaTrader terminal. I have already compiled the source file, the source code of this EA, which is essentially my Terminator EA, which trades exactly with this concept behind it. So the strategy that is coded in it is a range breakout strategy from the Asian session. It can trade on several pairs. My favorite pair for it is the USD JPY. Again, also here there is an important reason behind that. And the reason is that the JPY is essentially the currency of the Asian session, okay? It is the most traded currency during the Asian session. So if it is ranging the entire Asian session, then there is an increased probability that the price is compressed. And when the London and New York session will start, which have the USD as their main traded currency, at that point, there is an increased probability to see a strong trend develop from that, because the JPY wasn't much traded during the ranging session and then during the Asian ranging session. And then at that point, there is the breakout during the London and New York session, which bring high volatility to the US dollar. So let's go and run my algorithm on the high quality historical data here for USD JPY. The data was downloaded using the Quant Data Manager, which is a software that I really much recommend. I have not been paid to say this. I just use it a lot to download and import then in my MetaTrader terminal, both MT4 and MT5, the data. So just recommending them because I like them. And also, by the way, the Quant Analyzer is very, very, very interesting software and very useful software. So let's go and run the algorithm on the historical data. So I will just, for simplicity, take the last 10 years. So from 2015 all the way up to 2025. Now, basically, it's building up the time frames, and then it will start running it. It will start running the algorithm on the historical data. Let's go here on the graph. So as we can see, we are already almost at 100 trades, more than 100 trades executed, and it is simply now running the strategy on all the historical data. And as we can already notice, it is quite clear how there is in fact an edge which can be found by incorporating this concept and this building block and then building a strategy upon it. Clearly, there is an edge for some pairs more than others, but obviously there is an edge that can be built on a large amount of trades. As we can see, we're now almost at 1,000 trades, and this backtest will actually be thousands of trades. And as you can see, clearly our equity curve is looking quite nice, right? We went from 10,000 as a starting balance. Obviously, this is just the predefined. I didn't even modify it, it's just the predefined for the tester. We are now at 66,000, and it will continue to just increase and increase. Obviously, I have worked a lot on this EA and algorithm, so obviously I know already the backtesting data for it. So I hope you enjoyed this video, and I hope that you will study more these basic important concepts about the Forex market, and I will see you in my next video. Now, all this general free education and analysis that you see me provide on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go and check out my transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to all my courses, starting from the very basics of charting all the way up to the more advanced topics like how to build automated trading strategies using the MQL4 language, how to build portfolios of strategies, and using quantitative finance tools like the Quant Analyzer to actually build those portfolios of strategies. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations. You can get one-on-one mentorship directly with me. Also, you can gain access to the COT data software, which you often see me use on my YouTube channel. This is an all-in-one program. In fact, on top of all of this, you also have the possibility to gain access to all my personally developed EAs, so my automated trading tools. Here, you will see all the presentations of each and every one of them. And also you have the possibility to gain access to the trading show, so essentially a live stream of all the trades happening in live time from my live account. And if you continue to scroll down past the testimonials, you will see that you can also find the button to join now, and you will essentially be put in contact of my WhatsApp number. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you in my next video. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.